Yesterday, we saw the S&P 500 closing with an inside day, and today we get an outside day. The low today was lower than the low from yesterday, and the high was higher than the high from yesterday. So when oh when is this pullback ever going to get underway? And we're going to talk about why Trump is so upset with this one particular stock. Now, we come over and look at the fear and greed index. Right now, we're sitting at 69. Earlier today, I seen it swing all the way over into 71. Now, as we come over and look at the most recent investor sentiment survey, we are now back in the 30s. The bulls jumped on board 35.9. Keep in mind, the historical average is 37.5. The bears did jump off the ship a little bit, dropping down to 44.4. Now, when we look at how the indices fared across the board today, the Dow was up 271 points. The Nasdaq was down 34 points. S&P 500 was up 24 points, with the Russell 2000 being down 1.3. We look at advancing issues versus declining. We had 62.4% of issues declining on the day. Then when we come over and look at the sectors across the board, utilities was by far outpacing everything else to the upside. I don't know that's a good thing. And the laggards out there, consumer cyclicals and technology. Technology, as we saw with the Nasdaq, was down. And I got to be honest with you, I don't think that is too good for the overall market. We know a pullback is about to happen. Is it going to be before or after OPEX? Let me know your thoughts in the comment section down below. Now, if we come over and look at the heat map real quick and look at the Mag 7 stocks, we have Amazon down 2.4%. We had Tesla down 1.4%. We had Apple down 0.47%. NVIDIA down 0.38%. Google down 0.85%, Meta down 2.35%. Microsoft was the only Mag 7 stock in the green, and it was only up 0.04%. So if we come over and look at NVIDIA basically spiked a little bit higher, but we have basically a candle of indecision. We have a wick on the top. We have a wick on the bottom with a relatively small body, and this can be indicative of a breakout or breakdown from this pattern. Right below us, look what we have. We have that large gaping gap. We come over and take a look at Apple. Apple's basically flatline right around here. If you look left, right near a prior swing point, we have this large gaping gap right below us. MACD indicators still look strong. However, is this going to be temporarily in terms of Apple looking strong? Because when you look at this article right here, Trump isn't happy with how Apple plans to escape the China tariffs. And basically what he goes on to say is the iPhone maker is diversifying production to India amid tensions between the US and China, but the US president wants it to move stateside. Now, we know that for a long time, Trump's been trying to bring all the manufacturing back to the US. And Trump reportedly said on Thursday, "You're coming here to the US with $500 billion. But now I hear you're building all over India, and I do not want you building in India." Now, Apple is going to be invested in the US, $500 billion worth of investment. However, they said it's more going to be for Apple TV plus programming, not necessarily making of the iPhones, which is something that would create a lot more jobs out here. We come over and look at Coinbase, gets hacked, says cyber attack cost up to $400 million after bribed overseas employee stole customer data. If we come over real quick and look at a chart of Coinbase, we can see quite the move on the way back down, trying to retrace that big, large gaping candle on the way up. And what do we have right below us? We have a large gap. And think about gaps as nothing more than inefficiencies in the market. UnitedHealth's trouble piles up as stock sinks again after a report of the DOJ probe. Now, let's take a look at UNH real quick. That has absolutely been getting destroyed. UNH was down almost 11% again today. However, a little bit of good news, we did close with a hammer candle, and we do have two large gaping gaps above us. Actually, we have three. The big one from over here on earnings, and then two recent gaps on the way down. But if we look at UNH real quick and put this out here on a weekly chart, you can see this is absolutely disgusting. If we zoom that out, look how much destruction has been done. If we look right up here from the high down to the recent low, we can see UNH has been down 60% from the high all the way down here to the low. Now, if we come over and look at the volatility index, we can see it's closing today at 17.82. And something we talked about earlier on the live stream was early this morning, we saw the VIX was already weak and the overall stock market, all four of the indices were in the red. And I said during the live stream, somebody is lying. Is it the VIX or is it the indices? One of them is about to show their hand. And what do we see? We've seen stocks starting to creep up a little bit and the VIX continue to get weaker. Now, if you don't want to miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. Today, we gave away another Take Profit Trader account live on stream. Now to remind you guys of 3 amazing prop firm offers: Apex Trader funding, 80% off all their evaluation accounts, special pricing for the higher dollar accounts like the 150, 250, and 300K accounts. My Funded Futures, 30% off the expert plan. And if you're a first-time user of My Funded Futures, you can get 50% off any evaluation out there. And last but not least, one of my favorite prop firms out there, Take Profit Trader, 30% off all their evaluation accounts and no activation fee. Take advantage of these offers. Use the link in the description box down below. Now, if we look at the dollar index today, not a whole lot to see, but something that did help out stocks substantially today. Look at the 10-year yield forming a bearish engulfing candle. Now, we still have this potential for this A to B equals C to D pattern on yields, completed up here about 4.86. However, we must get above 4.58 before we can even talk about that target to the upside. And if yields do turn around and reverse course and start making its way towards that ABC pattern, you know what? Stocks are going to be in for a world of hurting. We come over and look at the SPY real quick. Notice we still have a lot of gaps down below us, and the market's like, gaps, we don't care about that. We look now from all-time high right down here towards the high of today, and we're only down about 3.61% from all-time highs. On the daily chart, looking at the MACD indicator, it looks extremely strong at this moment. We look down here at the 4-hour chart, MACD indicator kind of looking like it wants to roll over just a bit. Then the 30-minute chart, look what we have, the MACD indicator making its way towards the zero line, did not quite make it there yet. And then then it has another bearish crossover here. Now look at the profile. This is basically going to be a double distribution profile or an uppercase B. And I do expect that maybe tomorrow we come back in towards this minus development area. Quite often near highs and lows in the market, it's not uncommon to see outside days in the market where the low was lower than the prior day's low and the high was higher than the prior day's high. So let's keep that in mind, especially since we have OPEX coming out tomorrow. And when we look at the economic data that we had coming out today, the core PPI came in better than expected. Core retail sales, not as good as expected. PPI month over month, better than expected. Retail sales, a little bit of a beat. 0.1, but the previous reading was 1.7. Weekly unemployment claims came right in line. Empire State Manufacturing, a bit of a miss, and the Philly Fed Manufacturing, a little bit of a win. Powell ended up being a nothing burger, but tomorrow, I do want you guys to pay close attention. It may not look like much, but we have preliminary consumer sentiment at 10, followed by inflation expectations. Quite often on Fridays when we get a trend day, quite often this is a news event that kicks off those trend days. That could be a trend up or a trend down. One thing to note about a trend day on Friday, if that trend is intact before lunch, then we come back from lunch and it's still intact, watch out. The market quite often will continue to push in that direction all the way until the close. Now, if we come over and look at the futures markets real quick, notice what we have right here. The S&P 500 came right into our zone that we talked about in last night's 5 o'clock video. We came into it, boom, rejection, right back up and out, and actually made it to a new weekly high. We've had a range so far this week of 210 points. We built out this area of the profile. Now the question is, do we go higher from here or do we start to retrace back just a bit? Now, when we come over and look at the daily profiles, we can see where we came into that area, but look what we have left behind from today. We have this area, kind of an inefficiency in the market. So what I want to do is I want to mark this whole area off on the chart so I can pay attention to it for tonight and potentially tomorrow. That zone is going to be anywhere from about 59.14 down here to about 59.03. If we can break above value area high at 59.44 and a quarter and we start coming down, I want to target the point of control at 59.33 and a quarter. We break that, I then want to start to target that minus development area. And one thing I do want to remind you guys of, the first time we come into the minus development area, expect the market to bounce back out or form some type of consolidation within that area. It's very seldom that we flush all the way through it. Now, it does happen from time to time, and maybe tomorrow that will be what occurs, but I would use this more for a target location, and maybe if you like to play reversals, for the first bounce back up and out. Now, we come over and look at the QQQs real quick. Notice we have a wick on top of today's candle, spiked up higher. However, we were not able to close at that area. We have several anchored VWAPs below us, and at some point, is this going to act as a magnet, pulling price back down towards that area? MACD indicator on the daily chart is still extremely strong at this moment, and we have a lot of large gaping gaps down below us. Something I do want to go ahead and pay attention to, though, is grab our Fibonacci retracement tool. We may have to adjust this up if the market does go higher tomorrow, but let's pull and just look at some key fib levels. Keep in mind the 38% retracement would be a minor retracement, comes in at 485.91. That would be enough to come down here, fill the gap, maybe get the bears more excited about shorting the market, and then go ahead and get a face ripper all the way back up and work our way towards all-time highs. Coming over and look at the Nasdaq futures, we had that same zone like we talked about with the S&P. However, the Nasdaq did not make it down towards that structure breakout point, nor have we really made it towards this minus development area. We came right to the edge of it last night, then bink, right back up and out. When we come over and look at today's volume profile levels for the Nasdaq, keep in mind, value area high is going to be roughly where we're at now, 21,413 and a quarter. Point of control will be 21,299 and a quarter. Value area low will be 21,257 and a quarter. Now, one of the areas I would want to focus on, if indeed we get above value area high tonight and start coming back down, would be trying to target this minus development area within the profile. And that's going to be anywhere from about 21,350 down here to about 21,336. I think that then becomes a very high probability target. The question is, does it hit tonight or do we wait till tomorrow's New York session? And when we come into this area, the market could simply reject right back out the first time in it. But the first time we come into it, I would expect the market either reject back out or start to consolidate up and around that area. Something else I want to go ahead and do is pull a Fibonacci retracement from the swing low this morning all the way up towards the swing high. Notice where we came down towards, right down towards the 61.8. And we got to ask ourselves, if we start breaking above that high, is that doing nothing more than setting up a larger A to B equals C to D pattern? And if we look at where that pattern actually terminates, that would be all the way up here at 21,636.50. Now, last week, I just learned this about my funded futures. And if you want to see what that is, watch this next video right here.